Taking a look at futures right now, we are higher this morning due to those comments from the president yesterday. Dow up 306 in the pre-market, S&P up 44, NASDAQ up 209. Take a look at how we finished last night. We ended March with, well, a rally, at least for the day. The Dow surging more than 1,100 points. The S&P 500 had its best day since May of last year. Now, oil was the other story, because what we saw happen was when the stock market took off, the oil market fell. We are seeing more pressure on oil this morning. Brent, that's the global contract, is at 102.97. And as you can see, WTI just below $100 a barrel. President Trump says the U.S. may leave Iran within 2 to 3 weeks. He will be addressing the nation tonight at 9 p.m. Eastern time for an important update on the conflict. Meanwhile, the Wall Street Journal is reporting that the UAE is pushing for more aggressive action to reopen the Strait of Hormuz, urging a U.S.-led coalition, even considering joining military efforts to force the waterway open. President Trump also telling The Telegraph in a new interview this morning he's considering whether the U.S. should pull out of NATO when operations in Iran end. I want to bring in Rochefort co-CEO Kyle Bass. Kyle, good morning.
Good morning. How are you?
Good morning. So I'm good. So what is your assessment of all of this right now? Not just the economic impact with regards to the strait being closed. Maybe it reopens. We're hearing from UAE that they want to join in. But also, what are the potential risks still in front of us at this point?
Yeah, on the strait, we have strange bedfellows, right? We don't want oil prices higher, even though maybe they're a net benefit to our economy, given the structure and architecture of the United States being the largest producer. We don't want the prices higher going into the next few years. So at the same time, China needs access to the strait. So this is one scenario where you've got the entire GCC, the U.S., China, South Korea, Japan, Singapore, all on the same page.
Well, it's interesting, too. I want to bring in Adam Johnson into this, because the Wall Street Journal editorial board, you know, details in particular, the Hormuz stakes, they call it, Trump and the Hormuz stakes. Right. And, no matter what, we're still going to have damage, because if the strait stays mostly closed. They also say that optimists say the strait will reopen on its own once the bombing stops. And I think that's kind of the calculation that the president's making right now. And that echoes his comments, I believe.
The strait has to reopen. It's just a question of when and under what terms. Will Iran be controlling it? Will coalition be controlling it? Will U.S. be part of that coalition? Or actually, will the U.S. leave and say, no, Europe, you've got to carry on your water. We don't need that oil. You can't have a situation, it's just not sustainable, where the entire world is held hostage to a body of water that is 21 miles wide, especially when 20% of the oil in the world flows through those 21 miles and about 25% of LNG, liquefied natural gas, which Asia desperately needs. So by definition, this is not a sustainable situation. It's just a question of what are the terms that ultimately get us to a point where it's reopened. All
right. Hey, Kyle, we are going to be hearing from the president tonight, 9 p.m. Eastern time. What are you going to be in particular looking and listening for from President Trump tonight?
Again, we're at a point in this war where we have eliminated the Air Force, the Navy. We have eliminated the Chinese anti-stealth radar installations, and now we have full air superiority. We have superiority around the Horn there, and we've decapitated the Khamenei and his leadership into the IRGC. But as you know, there are 260,000 of those people, so we can't take them all. What we want to hear from President Trump is how are we going to get to a point where we can walk away? And the question is, do we leave the uranium there, or are we not leaving without the 900 plus pounds of highly enriched uranium? To the point that was just made, we have to understand that the last seaborne ships full of distillates, the last one hits the UK this Thursday. The last one hits continental Europe April 10th. There's nothing behind that. There are 28 to 30-day lags of shipments. So we're going to see severe shortages of fuel and potentially food in Asia and Europe in the coming 30 to 45 days. And I'm not sure the world has really grasped on to what that means for population centers in Europe.
Well, that's why I think you have conversations about the possibility of a global recession. Is that still a possibility in your mind based on what you're saying?
Yeah, I mean, if you look at the United States, you look at our markets. We've had 8 months of no jobs growth, and we would be talking recession if we didn't have other things on the front burner. So I think that to the extent that we have a supply shock, and we have, as a result of the supply shock, margins collapse. Farmers, consumers, everybody is going to have to tighten up a little bit. We might have a shallow recession here.
Yeah, well, certainly to your point, we are going to get ADP today at 8:15 Eastern time. We've got the March jobs report coming out on Friday. I do want to ask you before you go, though, about what's happening in AI. You've got several deals that are driving the trade. NVIDIA is investing $2 billion in Marvell Technologies, allowing it to build custom AI chips on NVIDIA's platform. And this expansion in the AI ecosystem is sparking a rally in chip stocks. OpenAI, by the way, closing a record $122 billion funding round of that. This values this company more than $850 billion. And remember, OpenAI is backed by Amazon, NVIDIA, and SoftBank. And then we had Microsoft close out the worst quarter since 2008. The stock down more than 20%. AI concerns are weighing on this stock. They're facing pressure basically to balance their investment in AI with, making money, making profits. Kyle, your thoughts on this?
Yeah, I mean, as you know, I'm not an AI expert, but the amount of CapEx that has to go into, let's just say, getting these LLMs to compete and win is pretty shocking. One of my close friends is an AI analyst, and I spoke with him yesterday, and he said that he can't believe what he's seeing at Anthropic. He said, Anthropic had about $6 billion worth of ARR versus recurring revenue, that they've raised going into February or going into March, and in the first 10 to 12 days of March, they added another 10 billion of revenue. You're seeing companies like Anthropic explode right now on the back of their ability to put these new agents in, these new coding agents. I'm probably butchering these terms, but they are actually becoming immensely profitable and immensely useful. And that's happening just in the last few months. So, I think that someone's going to win, someone's going to lose. It reminds me of the great dark fiber build of the late 1990s, where we eventually ended up using that fiber, but so many people got so far over their skis that we saw a number of bankruptcies. And so we'll see what happens. We'll see if the AI companies all have that money raising power to keep raising the CapEx they need to raise to spend to compete. So it's a race I don't want to be in, but I'm glad we have a few companies that are running it.
Well, Anthropic has had, of course, the recent run-in with the Department of War and the military. That was something that was not good news for them, but interesting about the investment arm for them. Real quick, yields before you go, because we do have this data coming out. ADP for March is at 8:15. The expectation, 40,000 private sector jobs. Retail sales comes out 8:30 a.m. Eastern. And then we've got the March jobs report out Friday. Kyle, what are you expecting here? And of all this data, what's the most important to you?
I mean, if you just look at the net new jobs growth, we haven't had any net new jobs growth in 8 months. And so, yesterday or the day before, you saw Oracle in an email, fire 30,000 people looking for billions of savings because they don't need these people. They don't need these coders and the people in these jobs. So, whether it's AI driven or whether it's late cycle driven, we don't have a robust jobs market that's growth at the moment.
Kyle Bass.
So I want to see growth.
Yeah, no, we certainly, and I think your point about what we see on that March jobs report on Friday is going to be key. Kyle, it's great to see you. Thank you for being here. A lot going on in the markets. Appreciate it.
Thank you.
All right.